So thank you for being here. So today we're gonna talk about. Hello, what's your name?
Hi, my name is Elvis.
Elvis.
Nice to see you, MC.
Nice to see you, Elvis.
Hi, Elvis.
You are a new agent?
Yeah, new broker.
New broker. Wow, welcome aboard. Oh my goodness, awesome.
I'm new to the office here, but I'm not new in the business.
You are experienced one. I love it. I love it.
I'd like to join this office
Thank you for joining us.
because all of you guys.
Oh, thank you, and we love you too for saying
We got a
that.
nice group. We got a nice group of people here. Here, this is even better. This guy.
Very nice to have you here, Elvis. Welcome aboard.
Oh, that's fine. It's good.
So today we will introduce to you a new product for self-employed. Last week we talked. Okay, let's review a little bit. We have every week we have a weekly mortgage discussion. So the last few weeks we go over Forgivable Equity Builder. Do you remember what that program is for? Anyone? Alex, what is it?
It's a 10% forgivable equity that is forgiven if you live in your house for 5 years continuously.
Yeah, awesome, Alex. So first-time home buyer who qualify for 10% down payment, free money if they live in the home for 5 years. Awesome program, right? And then we have My Home Assistant. Who remember My Home Assistant? Vita.
I can't remember.
You can remember. You have to remember to give it to help your client. 3% down payment. Yay! For this is also second loan, but it's 3% down payment. It's a 3% down payment from California. It is not forgivable. It's 1% interest rate, but you don't have to pay until you sell the house or refinance.
I think that's what they're talking about. Like, I have a client yesterday who called me, but I said, I think I know that, but I didn't pay attention.
What do we do with Vita? What do we do?
I'm just telling the truth.
So for student that not pay attention, we make her sit in a private island. So she's gonna sit here.
Yeah.
Just
Okay,
kidding. So my assistant is for also first time home buyer. They get, if they not qualify for the 10% down payment because their income is higher than the limit, then we suggest them to do the My Home Assistant. Which one? This one, the income limit is all the way up to 300,000 if you buy home in Santa Clara County. So almost everybody qualify for My Home Assistant, but they only get 3% down payment, not 10% down payment.
Okay.
So now you remember.
Yeah.
Okay. But we don't stop there. We don't stop there, okay, Vita? If somebody qualify for My Home Assistant 3% down payment, what do they get? Also? Jose.
The closing costs?
Closing costs. You guys remember. They get up to 15,000 for closing costs through Zip specific program. So you have to tell your client we have two different programs. The Forgivable Equity is the 10% down payment free for you after you live there 5 years. If you not qualify for the 10% down payment, we have the My Home Assistant that they give you 3% down payment and closing costs. So they either qualify for the 10% or they get 3% with closing costs.
Oh, okay.
Alright, so this is awesome for only California people, okay? And then we have VA loan, which we don't need down payment. And the people who qualify for VA loan, they don't have to pay for mortgage insurance. You have a question, Tivana?
Does that apply to mobile homes as well?
No, sorry. This Forgivable and My Home is for a single home. For mobile home, if the mobile home attached to the land and they own the land too, but in California, most of the mobile home people don't own the land. They only buy the mobile home. In that case, it's not real estate. When it's not real estate, they don't qualify for this. So these first three programs are not for mobile home or personal property. They are for real estate only. Good questions. Okay, so VA loan, we all know about it. People who qualify for VA loan, they don't have to have down payment. They don't even need closing costs because they can finance all of it. FHA loan, we need 3.5% down payment only. So the P&L, we only need for profit and loss statements. That's it. Okay, VOE, we're gonna verify their income through the HR department, but we don't need their pay stub tax return. That's much easier. This is for people who earn W-2 income. The VOE program, the P&L is for business owner. Today we have another program for business owner or self-employed people, 1099, people who earn 1099, that's called bank statement. So bank statement, let's go over bank statement together. So the first thing that we require is 12-month bank statement. Okay, we talk about business people, they don't want to give the tax return because they deduct expenses so much that they earn nothing from their income, so they not qualify for anything. So we ask them for profit and loss. If they provide us the profit and loss, then we can apply for them the program profit and loss. But for people who said, my CPA is not willing to do so, or I don't want to do P&L, then we have the 12-month bank statement. Because a lot of people, they prefer bank statement because they deposit a lot of money in their bank statement. And the banks, if they provide the 12-month bank statement, it show every month they deposit like $50,000. And if it is a business bank statement, then $50,000 a month average, then 50% of that is their income. That lender consider 50% of the deposit income, because the other 50% is business expenses. So that's how they calculate income. So we need the 12-month bank statement. If somebody provide us the 12-month personal bank statement, and if it's showing 50,000 deposit each month in average, then 50,000 is the income, the monthly income. Okay, and we also need 2 years of business license. What the reason we always ask for 2 years of business license, everyone? Why? Why we ask for 2 year business license?
The profit and loss.
No, the 2 year business license. It's
That's the requirement.
The
the requirement, but why do they ask for 2 years?
To know the business is stable or not.
Stability.
Close. So
Continuously means that they're not going to go to another business. That's the
I think
Primary
somebody
business.
say continuously. It's okay. They want to make sure that this business is over 2 years, because if business less than 2 years, it's kind of scary, right? It's risk when they land the business that's too new. But if the business over 2 years, it's kind of stable a little bit. So they need the 2 year business license. Okay. So we talk about 12-month personal bank statement. Alex, can you read me this requirement?
Okay, CPA letter. 100% of ownership, years in business, name of the business. Document that the CPA has prepared or reviewed the most recent 2 years of business tax return filing.
Thank you, Alex. Can you explain what Alex should read? So that's the letter that we need. If somebody wants the 12-month bank statement, beside the 12-month bank statement, we have to submit to the lender the CPA letter, and this is the letter required. So can you explain what in the letter?
Basically, like the proof of the business, how much
It's right here.
ownership they have in the business, and everything. You have the information of the business. Here's in the business, name of the business, and then just the CPA has gone over the 2 years of the business taxes.
Yeah. Either the CPA is the one who filed tax for them over the last 2 years or 3 years, 5 years, they have to state it in there. Or the CPA only review their tax return. Because sometimes the CPA don't want to do the letter, so the borrower have to look for a different CPA who willing to write a letter, and that CPA have to state it, I review their tax return in the last 3 years or 4 years or whatever. Okay? So either the one who filed tax for them or the one who just reviewed the paperwork. And then P&L have to prepare and sign by borrower. So even we do the 12-month business bank statement, we still have to do the P&L. You want to read this for me, Anna? read
P&L
the whole thing.
prepared signed by borrower covering the most recent 12 months must support or exceed income calculation based on bank statements.
Let me explain this. So, the borrower is the one who prepared the P&L, not the CPA. That's good, because the CPA sometimes they don't want to do it, right? And in the P&L, it had to be 12-month period. Now in October, if we submit a loan now, we want a P&L starting from October last year until now, or no, September. 12 months.
12 months.
So September to September,
Yeah,
right?
middle of September to.
So we have to go live September 1st, 2021 until September 30th, 2022. And it also said that the income must support or exceed, the money in the bank statement, the 12-month bank statement must support the income calculation in the P&L. Because if you say, I make 30,000 a month, but if your bank statement doesn't show that amount of money, then it doesn't make sense, right? So when we do the 12-month bank statement and we do the P&L, we have to be careful. We have to review the P&L for our client to make sure they're matching. Okay, the next one, Anna.
Business bank statements require 50% deduction for business expenses and overhead.
Okay, thank you. So I said about it, if we turn in the 12-month bank statement from the business side, we have the lender automatically deduct 50% of the average deposit, okay, for expenses. Next one,
Personal bank statements do not require deduction.
we also said about it. If we turn in the 12-month bank statement, personal bank statement, all the deposit count as income.
When borrower is operating a business out of a personal bank statement, the business must either be a sole proprietor or 1099 based. Business entity may not be a corporation or a partnership.
Okay. So, Alex, can you explain this?
Well, the business has to be sole proprietor. He has the solo proprietor. He's the only owner. It
Gotta
cannot be
use
corporation,
personal.
not partnership.
Thank you. So most of the time when we have our own business, we have to have a business account, right? Business bank account. But there are people, they don't even open a business bank account. They use their personal bank account to run the business. I come across a few of those. In this case, the lender require that business has to be sole, how you say this word?
Sole proprietor.
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 If you are a corporation or partnership, then you cannot use the income that you put in the personal bank account. That's not gonna work. So when you have no business bank account, you only use personal bank account for your own business, lenders still deduct 50% of your average deposit at expenses because you use only personal bank statement for your business. You see what I'm saying? If you have two bank statements, if you have personal bank statement and business bank statement, then and when you submit personal bank statement, they use 100%. But if you only have one bank statement, personal bank statement, and you submit it, they still take away 50% of your average deposit at your expense.
The following restrictions apply. Borrowers must be self-employed for at least 2 years.
That's easy, so continue on.
Statements must be consecutive and reflected the most recent months available.
Let me explain this one. So when we provide the 12-month bank statement, the latest one had to be, now it's October, right? We have to provide the latest one that's available. For example, we have the latest bank statement available in September, and then back. But we have to be consecutive 12-month back. We cannot skip any month. If we skip 1 month, they will say, wait, what's going on? I need that month. They won't let you get away with that 1 month that you don't submit. Because they look at every single month. Okay, so continuing, the next one, please.
Ineligible deposits such as non-business related accounts, transfers, one-time deposits, cash advance from credit cards. income sources already taken into account. Products, return credit, gifts, funds, and credit line deposits. Business financing related must be deducted from the calculation.
Can you explain it to me? This one, Elvis? That what he just read? What is not eligible for the deposit?
Yeah, pretty confusing here.
Okay.
I
So
haven't
break it
been-
down. Let's break it down.
Yeah.
The ineligible deposit.
Ineligible deposits, so such as a non-business related account transfer. So that's it's clear. So it's not eligible. Yeah, you cannot.
Let me
transfer some
explain
money.
non-business related account transfer. If I have another account, I have like three different bank accounts, and then I transfer from one of my account, like my stock account, to my business account or my personal account, that doesn't consider income because that's not income, right?
Right.
Thank you. And then one more, one-time deposit.
One-time deposit. Why do they say one-time deposit? As long as the lender they know what's the source of income.
Okay, I kind of understand the one-time deposit. Normally, when we run a business, for example, if I have a massage business, normally my deposit is $100, $300, maybe $500. It's not like all of a sudden $10,000, right? That's not accepted. Lender will look, oh, what is this 10,000? Because when my client come in, I charge them, I put it in right away, right? I charge my client, I put it in right away. And the amount have to make sense, right? This one, Elvis,
Is cash advances?
I can advance
From
from
credit
credit card. That's obvious, right? We
Yeah.
cannot use money from the credit card and transfer into our account and call it income, right? Or if they buy something and then they return it, they get back the credit, that doesn't consider income. Gift fund and credit line deposit, business financing related. So all that must be deducted from the calculation. So when we receive the Tolman bank statement from our client, we have to look at the deposit and make sure those are not one of these, because those are not income. We cannot put that into our income because we have an income calculator. We have to enter the number, and if we see something like this, we have to exclude them. We cannot put them in. Okay, that
How about construction?
Pascal.
Yeah. Large deposits defined as any single deposit exceeding 150% of average monthly total deposits should be omitted or sourced/explained with LOE from the borrower.
Okay, thank you. So example, like I said, for a massage company, and they normally they deposit 100, 200, 300, 500, and then all of a sudden they're at 20,000. That had to be omitted. We cannot include it because lender might think this. They just put it in to have enough down payment, so they cannot use it.
Unreasonable. That deposit unreasonable.
Not reasonable.
Yeah.
Yeah.
No reasonable is questionable.
Okay.
That's good.
They cannot pass the underwriter test.
Vita, can you read this for me?
Additional income deposited into the bank statements but derived from a source other than the self-employed business may not be included in the bank statement of the rates.
Okay, so lender look into all our deposit to see what they are, and sometimes they exclude some of the deposit if it doesn't make sense. Linda, can you read this one?
Transfer between accounts should be excluded.
Okay, that we talked about it already, right? Chị Vân Anh, can you read from there? The last one?
The percentage of the income used must coincide with the percentage of the business ownership. When using personal bank statement, borrower must be 100% owner.
So any question like when we turn in Tolman bank statement, personal bank statement, the borrower had to be 100% owner of the business, right? Otherwise, how can you use? Okay. So this is the we call it it's a metric, a table to tell us what the require for down payment, when it comes to purchase or refinance rate in term. So you look in here, this product is for primary residence, second home, and investment property. So it all type of transaction. And for one unit, single family, townhouse and condo, there are requirement of the down payment required based on the credit score, right? So I have a question for Jose. For people who want to borrow a loan less than 1.5 million and his FICO score is 720, what is the down payment?
For a single family residence,
Yeah,
that would be 15%.
15% down payment because the maximum loan to value is 85%. And because the maximum loan to value is 85%, that means we only need 15% down payment. Okay, so Alex, if someone with 620 FICO score, what is the down payment required for the loan amount up to 1.5 million?
35%.
35% down payment. Good job. How about Linda? If someone with 660 FICO score, what is the minimum down payment required?
25%.
25%. That's true. How about Vita? Someone with 680 FICO score, what is the down payment?
20%.
20%. Good job. So we know how to read this table. So when we go to the bigger loan amount, if someone needs $2.5 million loan amount, right? So Elvis, if somebody needs a $2.5 million loan amount and they apply for the purchase loan with this loan program, and if their FICO score is 640, what is the down payment?
40%.
Yes, 40%. How about Sergio?
I don't have such a big down payment.
Yeah.
40% down payment, no, I cannot afford it.
That's a lot, right? The 2.5 million loan, that means the house is like 5 million or something. Almost 5 million. How about Sergio? With 660 FICO score, with $2.5 million loan amount, how much is the down payment?
30%.
30%, yeah. So we can get them a loan up to $3 million. But as you see, when the loan amount bigger, the requirement in the down payment is higher.
How many?
Next one. This is for refinance cash out. And for refinance cash out, for somebody want to one unit condo townhouse, they want to refinance cash out with the loan up to $1.5 million. And if their FICO score is 680, they can cash out up to 75%. For example, if the if somebody with the home value $1 million and their FICO score is 680, and right now their loan amount is $400,000, they say, I want to cash out all I can. Then they say, okay, because your FICO score is 680, awesome, we can get you a new loan, $750,000, new loan amount, so that means you can bring home $350,000. So cash out $350,000. So new loan amount is $750,000, okay? Any questions? No questions? So this is just this is really easy. You don't have to memorize it. I can send it to you. If you ask me, I can send it to you, so you can have it somewhere so that you can answer your client question when you need to. Okay. All right. Any question on the Zoom? Okay. You don't have any question. Let's go to.
Actually, MC, I have one question. Zip specific.
Okay. Back up. Next.
Zip
No.
specific. Is that you talk about zip code?
Zip specific is the program, and that is just for closing costs.
Okay.
Closing cost assistant.
So then, the property located at a certain area, right? And a zip code.
Oh, good question. I never think about it that way, huh? I never think about it that way, but I know that with this program, people who qualify for My Home Assistant, they are also qualified for ZIP specific program, which means they can borrow up to $15,000 for closing costs. And this $15,000 closing cost is zero interest, but it's gonna stay there as one of their lien, but they don't have to pay for it until they sell the house or they refinance. Same thing at the My Home Assistant. That program, they can get 3% down payment, and that down payment 3% actually have 1% of interest. But they don't have to make monthly payment. that 3% stay there and the interest of 1% keep compounded until the day they sell the house, they have to pay off that, or they refinance, they pay off that my assistant.
So the 3% is a loan,
It's a loan for 1% interest, really easy.
but the first one, the forgivable.
It's not a
is
loan.
free,
It's completely free.
the 10%.
Yeah,
I like that.
I like it too.
I like it.
But not many people qualify. And by the way, the forgivable equity builder, when it just came out, the rate was so awesome. The rate was a lot lower than the conventional interest rate for a normal loan. But now, because so many people applying for it and so many people qualifying for it, the rate is 7%.
Oh, wow.
It's higher than the regular loan. So, and it keep going up. So people who qualify for this 10%, if they don't act on it right away, pretty soon they're not gonna qualify anymore, because when the rate go up, they're not qualify anymore. So they have to act on it right away, or they lose it. I have a license. Okay, thank you everybody. Any question before we go? No? Thank you so much.
Thank you for sharing.
Thank you. Thank you.
Alex Ramos, associate broker since 2015, helping buyers and sellers achieve their real estate goals in the Bay Area, San Jose and San Francisco. Well, I am now more knowledgeable on loans, and it gives me a lot of confidence in helping buyers pretty much know what they need to qualify for a loan. Well, it's MC's passion to help people understand loans so they can also help others. So it is her passion to help others. Well, absolutely. I would recommend MC's training to people who's looking to get a loan, especially the first-time home buyer, and also other agents who's helping buyers. I want them to know that the MC is a go-to resource to get a loan.